component part of NVIDIA sales to China or AMD or this or that, or these special shares in U.S. Steel or Nippon, I should say. What do you make of that?
Look, industrial policy is generally not good, except sometimes it is. I'm glad we didn't build Al Gore's information superhighway and spend trillions of dollars doing that 5 minutes before the cloud and the internet surfaced up. So I think it's except sometimes it's good, like for national defense, or we're missing an industry or a key thing.
Is that good, and do we need to do something?
I think the spirit behind the CHIP Act is, I understand it. I'm always adverse to picking winners and losers, but if the market is failing in some way, and other people's price advantages means that we will never have it, and it's essential to our national security, then I could see subsidizing it. And it's risky, and generally you can be wrong, but it's also wrong to do nothing and just watch something erode like that. Right. So I think in the long run it's good. And if the government is going to subsidize something for those very good reasons and not for wrong reasons, then it should get an economic stake, but it shouldn't have control. In other words,
right. How do you feel about a sovereign wealth fund? Because that may be the next step.
Well, that's a borderline. Look, I wouldn't do that. I don't think it. Look, anytime the government is involved, look, think of you can't close a fire station in New York, whether or not they need one there, because it gets into the politics. You can't close a military base because the community or the local congressman is powerful and doesn't want that base closed. The government, for reasons that we all understand, can't make very good decisions. So they should be out of the decision-making business as much as possible. But it doesn't mean that if they're forced by circumstances, national security reasons or other reasons, to make an investment in a sector of the economy, I don't mind them getting a passive stake. They should get a passive stake.
Thank you. Yeah, I left the set that President Trump actually called in, and I figured I'd take that call. Happy anniversary. Happy 30 years. He loves what we do. Really? Yeah, loves what we do every morning. Said, make sure you tell Becky and Andrew that he loves what.
What about me? Does he want to wish me happy?
He did mention Bob Kraft, and thought that was a great interview. He's devastated about Charlie Kirk, and said that what a guy, what a great individual. And he said he helped him greatly in the last election, and thinks that Charlie Kirk could have been president someday. He was such a talented guy. Then he went on to say the country will heal. He's focused on what he has been focused on, and he says, I'm focused on winning. If the country wins, and if I do everything I can to help the country win, that we're all going to be able to come together again. So that was his message.
It's kind of sober. I used to think that these times aren't as, everyone thinks these are the worst times. And then I remember 68, in the late 60s when you had all these bigger problems, shootings on campuses, all the things that went wrong in that period of time, tanks going into Czechoslovakia, all those things in 68. And I used to say, and then we had political assassinations. We don't have that today. Well, guess what? We're catching up to the worst times. And it's terrible. The problem is, big country, 350 million people, and I know people will say we're going down the tubes, but 350 million people are going to get wackos. And it doesn't mean we're necessarily going down the tubes, but you have to watch out for what, if a very small percentage applied to a very big number, you can get plenty of wackos.
Yeah. We're going to, we have breaking news now coming up too. Lloyd, thank you very much.
Good to see you guys, and congratulations really on your anniversary.
Great. Thank you.
Really great to see you.
Thank you.
Long time. Friends Steve Leisman and Rick Santelli are here for what we should get on time, and that is the CPI. Rick, you got it? Or Steve?
Up 0.4% versus an estimate of 0.3%. Real earnings minus 0.1%. Obviously, the inflation number's taking that off. Let's see what we got here. Year over year, headline 2.9%, right in line. Ex-food and energy 3.1%, right in line. No adjustment to the prior number. But the one thing is the headline. The core at 0.3 is exactly in line with estimates. Let's see what else we have here. Unadjusted. That's all I have right now, Joe. How's food was up 0.5%, so some pressure there. Food 0.4%. Owner's equivalent rent 0.4. A little bit of pressure right there. I don't have the actual table yet, but I'll get that in a second. Taking a look, we were see if the bond market is reacting at all. That's what Rick would be telling us, but he's going to be here in a second. I still have the 2-year at 351. Rick, do you remember where it was going in? I can't remember. 10-year at 4.01. So that's actually down a bit on this number. Yeah, pretty big decline. I think market's seeing essentially, Joe, this inflation numbers in line with expectations. Okay. The key here, and I'll dig into the numbers, I expect to find tariff inflation in there. The key all along, the main risk to all of this was it going to spread to other things? That does not appear to be the case. That was the risk that held the Fed back. We can argue, did it make sense for the Fed to guard against that kind of risk?
Is this a big moment, Rick? Is that
263,000? Is that what I'm seeing on initial jobless claims?
I didn't see that, Rick.
Yeah,
263,000. That is the news of the morning. We haven't been above 250,000 since October of 24. So 260,000, where's that going to comp to? It equals where we were in June of 23. To find a higher number, you're back to October of 21. To me, that's the biggie. We're talking about, is the Fed fund futures market going to potentially price in 50? That is your catalyst to actually get there.
To price in 50. Where's the 10-year, Steve? I was thinking we might get a 3 handle.
10-year coming up. 4. That's what the market's reacting to.
Exactly,
not the inflation number.
Exactly,
4. We're waiting for that under 4 number. Your buddies in Chicago, who have the calls on that part, right?
On the 4th of April, when we had our 3.99 yield close, low close for the year for 10s in Chicago, everybody was betting that we were going to spend a lot more time under 4%. I took the other side of that. I think debt and deficits matter. I think the yield curves matters. So I still say, even if we close, and it's based on a close, and a weekly close is your highest priority from a technical perspective. And once we get that, I think if I was a trader, I'd probably still end up fading it. I think if the Fed cuts 50, the yield curve steepens 25. I still think 10s are going to be there, and they're going to be stubborn. It makes me upset when I see everybody talking about 30-year bonds. 30-year bonds haven't been the biggie in over 20 years. And just because the UK and the Japanese, they trade those things by appointment, it gets distorted. Arbitrage keeps it in line. But you want to watch the 30s versus 10s spread, 5s versus 10s, the fight, the knob, because the steeper these get historically, the more that tells me that the premium in between these maturities is going to keep getting wider and wider.
Rick, I want to just cut you off for a second because I want everybody to take a bit of a chill pill here on this jobless claims number. I'm trying to run it down. There was a spike of 15,000 in Texas, and I don't know why that is. It could have been some kind of special sort of thing it could have been in local education or something like that. But if you back that out, it looks a little less drastic.
Traders don't like backing anything out of the garage. They look at everything in there, whether you have jalopies or limousines. It is what it is. These numbers have never been accurate, and I think that they're going to pay a lot more attention.
That's what I was going to ask. These numbers, the revisions that we've seen, how much attention do you pay to this the first go-around?
Our Treasury Secretary really kind of nailed it, and it made me a little nervous because basically he said it's not about maybe tweaking how we do the numbers. It's now becoming a case for how do we need to reform the Fed, and his logic is almost very hard to refute. If they're data dependent and the data is horrible, then maybe we do owe the markets more of a cut. I'm still an inflation hawk, but to see these numbers, especially on the producer side with no pass-through, I think a 50 is almost called for. And believe me, I'm not in the camp. Listen, I'm not going to be auditioning to be Fed chief, okay? So I'm not going to tell people, yeah, if Fed needs to cut. I think with record prices and equities, I agreed with most of Jay Powell's logic, but I think things have changed dramatically. And that 911,000 revision, more than half of those jobs taken away, that really does change.
Did last month, was it CPI first, then PPI? This month was it PPI, then CPI? So it was like that.
Yes.
So last month, PPI was great. CPI scared the hell out of everyone. This month, PPI was great, and CPI was in line.
CPI is okay, yeah.
I want to know what Lloyd Blankfein...
I just want to take the other side of Rick's trade here real quickly, which is...
You're sitting next to each other. Do not get into one of those. Actually, maybe that'd be good.
Yeah, why not?
Whatever's best for ratings.
I just don't want any fisticuffs.
Why not? if
Okay, I
it's
do
good
want
for ratings.
You're right. Okay, go.
Very quickly before Lloyd, you have a GDP running at a tracking forecast of north of 3%. You have the stock market near all-time highs.
At all-time highs.
Or at all-time highs, at or near. I get that the Fed can come down because it's restrictive, and there is not necessarily a reason to remain restrictive. There we go, a big bump, by the way, in the probability of the second cut, more confidence in the third cut this year. Wow. And I'm good with that. The question becomes, how far down should it go? How far from neutral is the Fed? It's because there's a huge
Who
debate.
the heck knows what neutral is?
Let me finish, Rick. There's a huge debate about what the right break-even rate is for this job market, given what's happened to immigration. We may be very close to that number.
Okay. I want to know what Lloyd Blankfein, who's sitting at the table, thinks of all of this.
Well, I agree with I agree with Steve, those inputs, though, so I won't repeat them. But I think to the extent that at this point we're pretty sure, we're baking in one cut and then a second cut, I don't think it would be crazy to do both of them now and still to do both of them together. You can look at it as we're doing the next two at once, or you could say maybe we should have done the last one, and 25 is catch up, and this other 25.
Do you think
but I think it's already it's baked in. The market is already providing it. Do it, and then I say another thing. The Fed has a dual mandate, and you want to be balanced in between. But I think the consequences of incremental inflation versus a drop-off in growth and employment, it's not the same consequence. I think the drop-off in employment will be felt much more radically and have bigger consequences to in the immediacy to the country than incremental
when you see
inflation.
The equity markets move higher on the back of this, what is
Because
otherwise bad news.
I think that we're in that mode where everybody would like to see confirmation that we will not be as that will be less tighter than we are at the present time. And I think that we're in the point where the bad news takes away what market perceives as the risk that will be overly influenced by trying to get to 2% on inflation.
What I can never figure out is on days like this, you see the market spike, at least initially, and then
only a little.
And then a little bit later in the day, people go, "Oh, this is actually bad news. I forgot that this is bad news."
In a market is a market. It's not the economy. And there's a lot of forces and technical.
50 basis points, you'd think 500 points in the market. So it's obviously worried about a slowdown.
But the market is telling you we're baking it in anyway. So why would we have to? What's the point in waiting at this point?
But I've been thinking for a while that it was asynchronous, that it was more on the growth worries than
right.
inflation.
You could say the risks of each. But you have to say, what are the consequences? Now, I don't want to say political consequences because I think the Fed should be independent, but it's not independent of the consequences of missing on one side of their dual mandate or the other. I think the consequences of getting it wrong and having growth fall off a cliff are much more consequential than incremental inflation, which will play out over time.
What were you saying, Rick, about the Treasury Secretary?
His comments that the Fed owes the market because if it was data dependent, it's missed its chance to get in front of this weakening labor market.
You would think for the 30th anniversary that we could book him, and he's going to be on tomorrow.
Yep.
Yeah, so
Now, what do we do when the big, beautiful bill gives the economy its second win? And I do think that's coming.
There's Treasury Secretary coming in.
I think it might be here now.
Good for the
We're
week.
getting. Some of the capex numbers have been pretty good, and I think that's an impact that's out there.
Well, during the April wild volatility, I also made a cheeseburger bet with some of my friends. I said we'd see 50,000 in the Dow before we'd see 39,000, and I'm going to win that bet.
Probably are. You want to him?
Well, I
agree with that.
I don't hate the idea of the equity market going up.
Right.
No, because you're the leader in what I'm probably going to follow. As we go home and babysit grandkids, we want to watch those 401ks clip higher, right?
As a retiree,
That's
I
right.
don't mind just watching the screen.
So when do we become coupon clippers? That's the key. When do we start to switch gears a little bit? That's a tough question.
God, does anybody know, in the days of digital currencies, does anybody know what it even means why you would ever clip? What does that even mean?
Only the people that I talk to probably know.
Did anybody actually clip them?
Yes, of
They
course.
clipped them with-
Absolutely, yes.
In
there
the
were
station
coupons on the bottom. You cut them off and you handed them in. They were like little bearer bonds.
One of my first jobs out of college was doing the tickets that were written out by the traders for Donaldson, Lufkin, and Ginrette.
Does anybody know why there were ticker tape parades? What was ticker? What did that even mean?
We had one. Yes, we had one yesterday when we rang the bell for was it yesterday?
2 days ago.
2 days ago.
I'm not seeing, by the way, just to get back to the point here, much change at all or much trade in this 50 basis points. I have it 10% up a couple percentage points. So those numbers that we had up before remain pretty good in terms of this outlook. And I think Lloyd is right. If the market thinks it's going to happen, prices it in now, there's no particular hurry that the Fed has to deliver it, though you would expect perhaps either in the dot plot or in the press conference the Fed chair to affirm this
Also
direction.
Reinforces if you're data dependent, be data dependent. And the data has moved.
I
They
agree.
tell us we got to go. You remember what Hans Gruber in Die Hard 1, what that was all about, right? All those bearer bonds, all those bearer bonds. Once you got bearer bonds, it was not a
You're the
social.
bearer.
You're the bearer.
Is that the episode where they were
That's where it's like this at the end.
taking gold out of the Fed and flipping those 400-ounce bars as if they weighed nothing? That was a little bit...
Yeah, that and Con Air I could watch once a month.
Lloyd, I want to thank you.
About a crazed hairdryer. That was a
Hans
weird...
Gruber was later Professor Snape.
Yes, he was.
Stephen, Rick, thank you.
The late,
Nice to see you in
great-
person together next to each other like this.
Good seeing you.
Thank
That was
you
good.
very, very much for celebrating.